Yo, what up, everybody? It is an interesting Monday morning. Ah, Sorry, I got to plug in so I don't have the same audio issues as last time. All right, everybody. We had a weekend full of all the fun stuff, geopolitical conflict, lots of commentary, all the usual BS. But I knew early on, and if you follow me on any of the more data-driven feeds, X or Threads, I posted the futures market was booming and shaking, and that we knew that futures prices were going to pop up, most notably the treasuries were moving up, oil prices were surging, all to be expected given extended geopolitical conflict. But keep in mind, you've also got an FOMC print, which is vital, CPI print coming out tomorrow. You got Williams talking today. We're going to cover that in a little bit here. And you got a bunch of information coming in. All this in a weekend where I'm sitting here behind the scenes upgrading the news feed to our streaming platform here. You'll notice that not only have we revised the lower Chiron down here, but we've also built in some new features, AI pushing information across, giving you more of a real-time outlook. I'm still working on this, so you can expect some of this to change. There you go. FOMC meeting context, all that fun stuff. So basically, one of the things I'm doing here is continuing to reformat this down here so that it has a little bit of a visual hierarchy and structure. And because of that visual hierarchy and structure, I'm looking to make improvements over time. One of the improvements I have gotten working, like this one here, is just pushing based off what we're hearing. But for example, this push works just fine. It's just a little bit longer than it needs to be contextually. One of the things this new bar down here will do for you guys is it gives you a clear indication of what it is. No longer the big color bar coming out of the bottom. I thought that that was more kind of YouTube niche-y. This is more newsroom feel. Obviously, the link, the text needs to be figured out a little bit. But basically, what it's going to also do is tell you the source. So it's going to source headlines as they come in and be able to push it to you. So for example, here you go, Reuters, and Reuters gives you that. It defaults to the previous one, but you're seeing a visual hierarchy with how we present things and give it to you on the show. And I'm hoping that this gives you a better overall experience. I'm also trying to make things a little bit more visually appealing and stand where they should be. So you'll notice that our show, which is lovingly brought to you by the team over at Fridays, go to joinfridays.com. enter in the code HIGHER, get you $100 off your first order. I've actually kind of like emphasized the focus on the sponsor side. It was a little bit too contrasty. So all bringing that back into your standard stream and your standard view so that we can all have a more pleasant viewing experience. Welcome to the show, everybody. We're going to, in the future episodes, one of the things I'm going to do is up here up top, I'm going to add 4 different segments, and we're going to structure the show a little bit more, I guess, rigid. Not so much in that we're going to change what we talk about here, but number one, I want to talk about the status of the market, right? That's always top It's what we do at the stop of the show. I'll give you the market status. I give you all the kind of our modeling. Number two, I want to go into the social narrative. Number 2 is going to be the headlines, the news narrative. And then number 3 will be the social narrative. And then number 4 will be scrolling through that information, going from what I would call the more data-driven to the kind of more emotional feeling context of the show, which hopefully will give you some consistency over time. I apologize, I did start a little early. I wanted to make sure that all this was up and running, and since we are, let's get into it, shall we? Status of the market is a no clear day, no clear trend. And the reason why, even though these things are down, Dow, NASDAQ, S&P, QQQ, everybody's waiting for the CPI print tomorrow, and the wartime stuff really drove up pricing. You've got some things on the horizon that you need to be intellectually honest about that are forthcoming, okay? And I want to make sure that everybody is aware of these things as we talk through the rest of the information here today. Number one, you have a CPI print coming out tomorrow. I don't think it's going to be a good print. Even if it's incrementally better, it's still going to be above the Fed's target 2% rate. One of the things that the Fed's Waller just mentioned, and he sounded very aggressive on the interest rate increase idea, and I don't disagree with this, is that you have a second wave of tariff inflation, which is likely to hit the economy. You had the initial tariffs that came through, then there was a brief hiatus, and then there was, oh, hey, you can't do this. And there was I think it was a 301. I don't remember the numbers, so forgive me there. But there was another round of tariffs that the White House put into effect. And you're going to see that pass through. This also cannot ignore the geopolitical conflict, the Strait of Hormuz closing, and all these things, which we know are typically stagflationary at the least, or, inflationary at the most likely outcome for any type of oil shock, which results in a region like this. Now, we can try to recoup money through, our escorts through the Strait of Hormuz, but that only lasts for so long, and the near-term implications are going to be felt not only at the pump, but obviously over time as inflation continues to rise. So I don't think the Fed has an ability here to not increase rates. I think these things looming are going to put even more pressure on them ahead of their next meeting. And since we're here, let's take a little bit of time to talk about said next meeting. This is the FOMC Fed Now probabilities. You've seen me cover them on the show before. This is using the CME's Fed Watch tool. This has changed materially since we last covered it last week. This is for there you go, Fed funds right there. See, every once in a while my AI works. So July 29th on 2026. So just about 2 weeks from now, you're going to get an FOMC meeting. And right now, as of today, it's a 58.8% probability they keep rates where they are, so almost 60%. But this number has been increasing steadily, 41.2% probability of a Fed funds rate increase. And based on what Waller just came out and said, I think that there's going to be an overwhelming likelihood of that happening. That's going to get increasingly visibly greater as you get closer to that time. Now, let's spend some time going into this. This is from CNBC. This conversation just happened a couple hours ago. Federal Reserve Governor Christopher Waller on Monday expressed concerns about inflation, but cautioned against fighting the last war, saying that the central bank should wait for more data before raising interest rates. Ironically, he says this the day before the next CPI print comes out, which is the key print, and that comes out tomorrow. You'll get that from us in real time as it comes out. In remarks delivered for a speech in New York, Waller said inflation has expanded beyond the often cited drivers, such as energy price spike in tariffs. Rather, he cited other factors, particularly artificial intelligence, as root causes for why price increases have held stubbornly above the Fed's 2% target. At least we're seeing some acknowledgement by FOMC members now that AI is having a material impact. For the longest time, they were somewhat agnostic, and I thought that was ill-timed and poor judgment on their part. But here we are. So, ironically, you also have an FOMC head in Warsh, who typically doesn't like over communication, and here you have one of their Fed presidents communicating on a topic like this the day before print. You have to wonder if this is sanctioned or if this will be prohibited practice under the new, or at least presumably new, communication rules. So Waller warned that the desire to avoid past mistakes is often the author of new ones. I would agree. I am cognizant of the mistake we made in 2021 by not responding sooner to the high inflation we observed, and I am determined to avoid repeating it, he said. To me, that's about as clear as you're going to get that he's going to vote to increase rates. And he's not speaking alone here. There are other FOMC members who clearly feel this way. However, he said that that doesn't reflexively mean raising rates, interest rates, to head off the current state of price increases. Waller said that there is still a credible case for inflation to begin to fall back. I don't see that case personally, but noted there is an equally plausible scenario where inflation could stay elevated or increase, requiring tighter monetary policy in the near term. I think that is the case, frankly. He goes on, I'll read some of the quotes here. As always, we need to avoid making the mistake of fighting the last war and reacting too soon to tighten inflation merely because we waited too long last time, he said. But we also must avoid repeating the same mistake where we made in 2021 and 2022 by waiting too long to respond. I often hear people say that because inflation expectations are anchored, central bank bankers do not have to respond to above target inflation. This view is wrong, he said, sternly staring at inflation until it melts before our withering gaze is not an option. So you can tell he was pretty pointed here. I'll read one last quote. I would be very pleased to see a lower reading on core inflation, supposed to come out tomorrow, mind you. But after its escalation over the first half of this year, I will need to see several months of lower readings to feel inflation is moving in the right direction, Waller said. So there you go. Latest release, inflation 3.4% year over year. Fred, this May. We expect the June print to be higher than that. At least I do anyway, and that's just I'm also going to see, you're going to see me taking some screenshots during this whole thing. I'm just trying to make sure that the AI that we're using to power our systems are working the way they should. So if you see the screen go dim like that, that's not me messing with your visual senses. It's just me screenshotting so I can show AI later on what worked and didn't work. Like, for example, this pushed here automatically. So Gemini is listening in and pushing things that we're talking about. Like, this is a great example of it. And that's very useful because it gives us kind of a reflection point to go through. And it's a real-time production where I don't have to actually monitor it. It kind of works on its own. One day I should just kind of show how we do this in the back end. But for all of you who are watching, this is going to be a fun show. Vic Ramirez, your boy, got good news. Oh, yeah? What's the good news, Vic? Hit me up. Let's see what else we got here. Sean, whoa. Starting early. I did start a little early, dude. Sorry. I just wanted to make sure that all the stuff that we changed over the weekend. So a lot of what you see here is a visual overlay. It's just HTML and some PNG files, but the data that pushes inside of it is a bit more complex, and it's in part AI on a separate machine listening in real time. So there's a lot of moving parts that I changed over the weekend. And I did all of this from my MacBook Neo at home because I can remote into all three computers at the same time. So because of that, I wanted to get started a little early, just get it tested in real time and see how all of this works. And because I knew there was some breaking news that was coming out that was important to talk about as well. So we know the status of the market is, again, no clear trend. All the major indices are down. Synthetic volatility index is 73, but this has come down from, call it, the mid 80s. One of the things I want to add to this is I want to add a consistent reading over time. We're not logging this as of right now. That's phase 2, and that's going to come out here in a little bit with synthetic volatility. But for those of you who track things like the VIX, like I do, I have that for you as well. And we're going to take a look at this right now. The volatility index is increasing, up 1.84% today. That's a big jump as far as VIX goes. Anything below 20 is considered to be relatively stable. Anything above that is considered to be very fearful and afraid. I think we are entering into fearful territory, not because of what the VIX says, but because of what the Treasury says. But what concerns me more is that you have no clear trend. You're not in a defensive position. The market's not liquidating. Okay. You don't have fear in the market as measured by the VIX, which is, the proxy for that. Sorry, turn the air conditioning on here. And then what you have seems to be very logical, pragmatic investment decision making. People going, okay, this war is going to last longer. The CPI print's going to come in higher. The FOMC is going to raise the Fed funds rate. Let's shift our money around and move. But it's not doing that out of fear. It's doing it out of what seems to be a very pragmatic, thoughtful process. And to me, that's concerning Fed's balance sheet remains to be tense. Liquidity on the balance sheet in and of itself is actually okay, but bank reserves and treasury borrowings overnight are pretty big. Keep an eye on the banking sector this week, too. You got all the big banks starting to report tomorrow, Tuesday, July 14th. It's going to start. They're all going to start reporting tomorrow. I'm going to go through Friday. You're also going to get Blackstone, all the big banks. So you're going to see a lot of that printing. It's going to tell you a lot about what's going on in the credit set of circumstances and consumer behavior. I use banks as a proxy for what consumer behavior is and is not like. One of the back-end features we've added to this tech stack that we use to display everything to you today is we've actually started pulling down bank call reports and analyzing them for the last couple quarters. This will give us a look into the changing landscape of consumer behavior based on banks' call reporting, which is a much more uniform way of presenting and more detailed in some ways than their SEC public filings. And all banks, whether they're public or not, file call reports. So this will help us compare and look at consumer behaviors using the bank call reports in the future, and it's not a very often understood thing, so I like to use it because I come from that background. Home affordability continues to be stretched. We're going to see mortgage rates rise because of where the 10-year is at. You've seen it pop up a couple different times here, but the 10-year Treasury is continuing to rise. One of the things we look at and monitor is the 10-year to 2-year spread pretty regularly, trying to figure out where the 10-year is and where the bond market's moving. That spread as, oh, look at that. See, that's just good work by your AI. Your 10-year Treasury rates are up 4.54%, up down about 2 basis points in the last couple of minutes or so, but I think it's actually up higher than that. Let me capture this real quick. There we go. All right, let's take a look at the bonds here. Bonds, yeah, 4.616 is actually what I got today so far, so it's even higher than that. Let's see, actually, oh yeah, Fred as of July 9th. So that's the problem. We're pulling that data from Fred as opposed to here. There we go. Pull that there. All right, so I have our actual up-to-date current information, and that's why we test kids, is you got Fred data here showing us one thing. This is what the Federal Reserve looks at, but this is your real-time data, 4.618 up on the day, and that's well above 4.5, where I told you just last week I'd seen it come back down, and that was making me feel a little bit better. But this is kind of a scary trend. The long-term rising here is going to push mortgage rates up. Let's take a look at it over the course of the last 1 month. I think you'll see some more volatility here than most people realize. So looking at this over the course of the last month, look at that, right? So you had it spike up a little bit, come back down, and now it's back up this way, putting upward pressure on mortgage rates. So much so that you're going to start seeing this number here rise pretty notably. This is, again, over a week old. And on July 9th, to give you an idea where Fred data is pulling from is, let's see here. Let's see if I have it. Yeah, right there. So Fred data had, no, this is June, sorry. Let's go back to July 9th. Here we go, July 8th, July 9th. So July 9th, the treasuries were at 4.5-ish, right? And now we're at 4.6. So you're going to see, call it a 6.6% rate on average on the 30-year mortgage rate if nothing else changes in a static environment in the upcoming days. So expect that. That's likely to happen. I think it's a real thing. At the same time, we should probably take a look at crude oil prices. I think oil is going to be popping here, almost at $80 a barrel again. And there you go, 77.51. And if you're watching the show at the very, very beginning of this, let's see here. Perfect. Look at that. See, so I'm testing things out here today, and the data prints seem to be working pretty well. I got to change the Fed stuff from the bonds over. But this came from earlier today. We saw a future slide, oil slump. We also saw oil gains over 4% as Trump spoke. Again, I know that some of this is truncated here, but that was a breaking news headline, and it is clearly in place today, and we're seeing it rise. It would not surprise me without any type of resolution near term that we saw this prolonged price rise even higher, meaning that you see something with an 80 handle on it again, frankly, relatively soon. And I don't see a world where that comes off of that position anytime soon. Frankly, it's looking pretty grim from a political standpoint. I don't see any negotiation happening. We've been going down this path of, oh, we're negotiating. There's a ceasefire coming. There's not a ceasefire coming. I think the market's lost confidence in it. So until such time as we've got some more clarity, it's going to be high. And then you'll see a sell-off just like you saw last time they announced a ceasefire or some type of resolution. So just be aware if you're investing in this space or you're going into the crude oil space, Brent oil space, that is a possibility. Sectors, before I get into the XAI piece, DR, Horton, Lennar, Polta Group, Toll Brothers, NVR, all incrementally down on the day. It is a mixed day, so nothing terribly god-awful happening to this stock. But if you look at For example, DR Horton's stock price, they're down 1.19%. This is a rate-sensitive demand market, and we know that the 10-year is rising, and we have a little bit of conviction. It's not happening because of fear. It's not happening because of press releases. You're just seeing stocks that are being impacted because you expect 10 basis points to rise in mortgage rates, and those mortgage rates will impact the home builders accordingly. So that's all you're really seeing here. Switching over to banks, JPMorgan, Bank of America, Wells Fargo, Goldman Sachs, Citigroup, all scheduled to report this week. They're down incrementally due to the credit conditions in the environment, but I think they're just being dragged down by the market as opposed to them actually having any type of bad reports. At least right now, we'll see what happens when each one of these companies report this week, and we'll see how their stock responds to it. I know there are some banks, community regional banks, getting hit with fraud and some type of credit default, so we'll see if more of that continues to happen. I know there is a lot of visible pain points around non-depository financial institutions. NDFIs is the new buzzword in the regulatory zeitgeist, so expect to hear a little bit more about that as time goes on. CRE REITs, okay, these are going to do well. The short end of the curve is rising up a little bit, but there hasn't been any significant issues here from a credit perspective. What I will tell you to watch out for, as some of these real estate holdings switch from office into multifamily apartments, that to me is a good trade. Need housing, supply issue long term is going to have more building. It's going to be part of it. These major metropolitan areas where density is a problem and you had office spaces, there's a good use case for that to be multifamily apartment complexes if the space is rezoned or appropriately zoned for it. The other side of it is a data center argument. Data centers are going to become a huge part of the zeitgeist. And one of the things you're seeing across the country is data centers are failing on about a 40% rate. They'll go to the community, they'll try to get it done, the community protests, and about 40% of the ones that go through actually never get done. And now the people who were promoting the ideas of data centers in communities are starting to get a little more smart about it. They're starting to make them more aesthetically pleasing. So whenever they show at city council meetings and so on and so forth, what these data centers are going to look like, they're a lot more, I guess, architecturally pleasing. They look more like museums, more like high-end luxury buildings from the outside anyway, than actual data centers, trying to get a little more community buy-in. I think the data center piece, as it relates to AI, does have some risk in it. And I think that if you're going to go into real estate investment trusts or commercial real estate, you have to be somewhat mindful of what the underlying makeup of the type of real estate is in these trusts. But I also think that these are all going to be good performers relative to the market over the course of the next couple years. But again, watch the data center exposure and understand what type of exposure is actually there. Getting back into the sectors, mega cap market leadership, Apple, Microsoft, NVIDIA, Amazon, and Alphabet all here. We're going to spend some time today going into the Apple lawsuit against OpenAI, and I think it's got legs. I am a licensed attorney. This is not my legal opinion as much as it's just me reading what seems to be pretty black and white accusations. Everyone's innocent until proven guilty, but OpenAI is not a beloved company. Apple is a beloved company, and there's a problem on the horizon. Apple stock up incrementally today. Microsoft stocks, I'm just going to keep saying that until they innovate. I want Microsoft to win. I want them to do well, but I need them to innovate. I need to see it before I can actually co-sign their stock price again. So let's spend some time going over some social stuff that I did, which explains in part what the lawsuit with OpenAI and Apple is really about. I was a bit surprised. So I spent some time this weekend diving into the actual lawsuit itself. And then I put together some just slides that are aesthetically pleasing, because that's what we do here. But it is actually pretty interesting stuff. So I'll read it to you, and then I'll get into some of the nuances here. And I actually looked up the names here. So Apple sues OpenAI, alleging trade secret theft, says scheme was at every level. And the more you read in the lawsuit, there's a ton of elements here that are worthwhile. So they're saying theft at every level. Apple filed a federal lawsuit claiming OpenAI stole its IP from every angle. Again, every angle. It's just repeated over and over again. Talent, hardware, manufacturing secrets to build competing consumer products. And to be clear here, from a timeline, you need to be aware of what happened. Johnny Ive leaves, he's the lead designer, leaves Apple, starts a company. He starts it with a gentleman, I think his last name is Ting, and the two of them start this company. In about a year, they sell it for billions of dollars to OpenAI. What OpenAI bought was not an innovative product because they hadn't brought one to market yet. What they bought was Apple's trade secrets stolen and put into that company. And then there's some other elements as part of this conversation. They were going to build some type of consumer product. Well, bring your Apple parts in most of the conversations they have. OpenAI hardware chief Tang Tan, so his first name was Tang, his last name was Tan. He started the company with Johnny Ive. Allegedly told Apple job candidates to bring real Apple components to interviews for, quote, show and tell. This is not good. And if they're quoting, that means they have it in writing, which is also doubly bad from a legal perspective. That's industrial espionage dressed as recruiting. Well, yeah. Now, you could argue everybody's got an Apple product in their pocket. Everyone's got access to them, but that's not the products they're talking about. They're talking about real Apple components, some of which were never released, projects that were unfinished. You're talking about stuff that was not available on the market. And that is a very key difference here. Stole a laptop walking out. It's not the laptop theft that's the problem. What was on the laptop? Now, that was the actual problem here. Former Apple employee Sheng Liu allegedly took an Apple laptop with him on his way to OpenAI. He's now a named defendant in the federal lawsuit. Again, the laptop is not the product concern. It's the information that was on the laptop. Why would you bring a laptop that's proprietary and locked down with company information to a meeting with a company that you're going to go to work for? It just seems like a Molotov cocktail of bad problems. These lockdown environments ensure that you can't send stuff out. So the workaround, obviously, is you just bring it with you to show somebody. Well, that's a bad look. And Apple, as you probably know, tracks products as well. So they'll be able to tell where that laptop actually went. Coach to evade security. This one is where conspiracy gets in and it starts to get real ugly for OpenAI. Apple says OpenAI coached departing employees on how to bypass Apple's own exit security. If they can prove that in court, it's a done deal for OpenAI. They lose this lawsuit. It'll probably settle before it gets there, is my guess. Then used manufacturers to copy its proprietary metal finishing techniques without permission. That one's interesting. The metal finishing technique, proprietary. I mean, who cares? Shouldn't you be more concerned about the IP? I mean, I guess on some level it's IP, but I mean, it's nice material. Don't get me wrong, but it's just whatever. So again, the $6.4 billion deal that broke it. So OpenAI paid $6.4 billion for Johnny Ive's and Tang's hardware startup IO products. They paid for this. That ended the Apple partnership. Apple is now building Siri on Google Gemini instead of OpenAI. So Apple was just trying to avoid this, you can tell, and probably gearing up for the lawsuit after Johnny sold this. Now, Johnny made the headlines recently in helping to design the Ferrari Luce, which was not well received either from an aesthetic perspective after his departure. IPO on the line, Apple is seeking damages, an injunction, and full destruction of stolen IP, which is a reasonable request, given the intellectual property arguments here. The timing couldn't be worse. OpenAI's anticipated IPO is directly in the crosshairs, and that's why I think this is likely to settle, is that OpenAI doesn't want this information getting out. It doesn't want them impacting their IPO, and they certainly don't want to go to war with somebody with a massive war chest like Apple, which clearly has already begun. So that's what we put out over the weekend. I didn't feel like putting out the actual legal documents was going to provide a whole lot of value to a lot of people, but you get the overall gist of the conversation there. It's a pretty interesting lawsuit. One I think that Apple is going to be successful in the merits on, because a lot of what's filed in the actual court documents, and I did read the complaint, it's pretty clear. They've got evidence for this stuff. This is real. It's not manifested, and it's going to be a problem. So expect to see that continue to manifest and build over time. If you're OpenAI, you don't want to get to depositions and discovery. And let me tell you why. Actually, I'll do this before I move on. Everybody on a jury stand is going to have some familiarity with Apple. You're not going to find any American citizen in the country who doesn't know of Apple, and probably more likely than not uses their products in one form or another. I would be a terrible juror for this. I'm a big Apple fanboy. So what happens? You're going to get some biasness. Now, back in the day when intellectual property was stolen for things like Google's startup, Google was accused of all sorts of theft, right? But these AI models are a bit unique. They're all based on data of other people. It's a whole big controversy how OpenAI got started, because they started off of Reddit data, something that the Reddit previous founders really did not want to do. And there was some logistics that went on politically that seemed a little shifty that resulted in his departure, and then OpenAI getting access to all this data on Reddit. But in theory, this is all your data, my data, everybody's data, and they're building a company off of it. Whereas Anthropic was given a set of rules and it still builds off other people's data. So we are really data farming everybody else around us. And we've been doing this for a long time. Even fucking Pokemon Go mines your data and sells it to third party countries, which is also a whole different geopolitical war conflict conversation, which could take place at any point in time. But so now we're at this point where, you know, Google back in the day can win those lawsuits about the open publicness of this data usage, but OpenAI is not well loved. As a matter of fact, there's a lot of critics. Go to any college, mention AI at a commencement ceremony, and watch how enraged students get. So I don't know that this is going to bode well for the AI companies as time goes on. You got data center concerns. You got people who are really upset about losing jobs. You got people who don't want their data out there. You've got people who don't like AI slop, and I'm using their words, not mine. There's you got this whole other cohort of people who are saying, wait a minute, this was supposed to be cheaper and cheaper, and it's getting more and more expensive. As a matter of fact, I saw Chamath recently say that he's spending, every several months, he's spending more and more money and getting less and less productivity. Well, that isn't the productivity, bell curve that we were hoping to see. You weren't seeing this. We were expecting to see this kind of parabolic rise of efficiency with lower costs, and it's going quite the other way. Efficiency is going down, and costs are going up. So. Again, there's a lot of people who are very critical of this process. So I don't think this bodes well for OpenAI and any of the AI companies. I think there's going to be all sorts of industry pressure to not open up discovery on this. So I think you get a settlement here because going to court and letting the world see how dubious companies are, even outside of the AI space, is probably a bad idea. The consumer sector, Walmart, Target, Costco, Home Depot, Dollar General, all mixed on the day. Should come as no surprise. I don't know why Dollar General's price is up $3.86. I'll have to fact check that a little later and figure out exactly why they're up different relative to the market. Could be nothing. Industrials, real economy signals, Caterpillar, Deere. There you go. See? Dollar General 23.52 up 3.8%. Dollar General surges at discount retail gains momentum. See? AI helps us, right? So discount retail is gaining momentum, tells you one thing and one thing only. Consumer stress is starting to affect consumer spending. Consumer spending, even though the credit debt levels are rising, is going towards a cheaper place to get their assets. That's a great answer. Good job to the AI. Energy sector, you should expect this. Exxon, Chevron, ConocoPhillips, Schlumberger, and EOG Resources all up big on the day. ExxonMobil seems to be the outlying winner here with EOG Resources in probably a neck and neck tie for the two of them on the stock price, but certainly doing quite well from a supply risk, geopolitical risk perspective. And that's just pari passu with what you're seeing in the WTI crude rate price, right? You got $77.64 here. Let's refresh and see if it's still that. 77.62. So it's holding. It's holding up there high. Defensive stock positions, you're not going to see a whole lot of positive movement today. You're seeing Procter & Gamble, Coca-Cola, Johnson & Johnson, NextEra Energy, and Duke Energy up on the day. But this is not because of, I would say, this fear that I've talked about before. Again, if people start getting defensive, risk off, and liquidation, you will see the price of these assets rise, but we're not quite there yet. I don't think we're going to go into the staples or the fundamentals. The market is still looking at some of the things in the market the people that are trading the market are looking at some of the non-fundamental optimistic views still in the market. Whereas I think that perspective will change over time here because I think there is a bit of an AI shakeout that needs to happen. Anecdotally, those robots over the weekend that rolled out, I think it was X1. Holy shit, those are cool. We're going to cover that in a little bit here. So that is the market sectors. Before we get to XAI, is there any questions, comments, concerns, thoughts? 33 minutes in so far. How's everybody feeling? Let's take a look here. Sean, mostly just what we got here. If I add up months of paying for, yeah, you're not alone in this sentiment. So I'll post it up here and see and read it. I think that's actually pretty good information. Let's see here. I gotta find the. Oh, is it not pushing through? Oh, it's not pushing through today. Sorry, buddy. I'll fix that later. But basically, he said in the comments section, interesting, not coming through on this side either. If I had to add up the months of paying for OpenAI versus when I was when I finally was able to make some money from it, I'm still at a loss, but finally getting traction over a year. Yeah, me too. One of the hardest things for me to learn was how to use it. I think in the beginning I used my agentic AI, which uses API tokens and costs. That doesn't make any sense. If you have agentic AI or you're using with an agent, you got to use Claude on the website or in their app, and then Claude Code in the terminal to draw from your monthly spend so that you tap that out and your usage there before you get into agentic AI. And think of your agentic AI layer as not as somebody you talk to in this sycophantic way. It's going to deliver things for you on a reoccurring basis. Everything else should be engineered by those other two features because there's a flat cost with it and there's usage that get tolled out over time, but it's a lot more cost efficient if you're going to be doing that. So just my 2 cents on it. Let's get to XAI real quick. Fed rate hike possibility, Waller's conversation. Fed Governor Chris Waller stated that a rate hike should be on the table if a coming inflation print comes in hot. You really think he doesn't know? You really think the inflation's coming out tomorrow? You think he's walking around going like, yeah, I don't know, could go up, could go down? I think he knows. Oh, there you go. India's retail inflation accelerating, confirmed by 3 independent outlets, CNBC, Reuters, and PitchBook. Yeah, this is a problem. I was getting news alerts on this all weekend long, by the way. One of the new features of this is going to push through breaking stuff. And what it'll do, actually, I can probably show you guys if you have any curiosity. One of the things that I built in the back end here was an overlay. And instant view there you go, perfect. I'm going to show you guys exactly what it looks like without giving you the whole back end here. So what I'm going to show you is exactly one of the panels that I built. And let's see here, I'll go to the screenshot. So this panel, there you go, perfect, runs in the background. And what it allows me to do is control this overlay as you're seeing it, right? And in doing that, it also gives me the ability to do things like over here, you can see this pop up. It allows me to re-push the headlines as they come in, or if I don't respond within a certain period of time, it'll push the headlines on its own. It also has a red bar that comes up here and it alerts me in the background. So it's kind of a cool way to do it. I also get text messages from my agentic AI in the background as well, which is kind of cool. But it's been a fun experience playing with this. And this is what my AI money has gone to build along with this server and everything else in the back end. So market may be overreacting to a single Fed voice here. I don't think that's the case. I think he's voicing everybody else's opinion. Waller's hawkish tone contracts with recent, it does track with recent conversational consensus that we saw in the FOMC minutes. So it does contradict some of the dovish tone, but I don't think you can be dovish, and I think that he came out with support of other people. I don't think that he made those comments without other people are in the room somewhat contextually at least agreeing with his standpoint here. U.S. federal debt hits 39.4 trillion. Total U.S. Federal debt reached a record 39.4 trillion, up 3.2 trillion in 12 months and 16.3 trillion since 2020. That's a big number. Hedge funds piling into semiconductors. You should always be concerned when you see this happening. Classic smart money accumulation pattern. After shakeout, however, 10% allocation represents concentration risk. If hedge funds are late to the party, and I think that they are, you're seeing the end of the investment cycle, not the beginning. Iran tensions, Strait of Hormuz, this should come as no surprise. This is trending on social media. Trump announced reinstating Iranian blockade with ship traffic through the Strait of Hormuz fails steeply. Saudi-led coalition intercepted Houthi ballistic missiles. There was firing all over the place last night, including at what I think their Iran Revolutionary Guards Navy building was. So a lot going on there. Tylenol Austin autism lawsuit revived. I thought that was a bit shocking. We'll see and continue to track that. SpaceX Starship test flight approval. I never thought during my lifetime I would see anything references a Starship and being approved and actually happening. So that's kind of cool. U.S. agency closed Starship review ahead of SpaceX's next test flight, signaling regulatory clearance. This represents progress for commercial space sector and SpaceX. SpaceX remains private, but approval benefits remains private. That's interesting. Is AI behind here? Approval benefits aerospace supply chain and competitors. Oh, the approval for them remains private, but the approval benefits aerospace supply chain competitors. Successful launch could put pressure on traditional launch providers and boost. Yeah, okay. All right. Well, yeah, the narrative this week has been interesting. I also have something I want to share from an AI perspective for those of you who are AI curious from Fast Company. It was on there. It's going to stop this video from being able to be advertised, but I'm also okay with that because I think it's important to share. So I'll bring this up on screen here in a moment. And then we're also going to look at a couple other things on X. So I'll start with X, and then we'll finish up with Fast Company. This is the Fast Company piece is kind of the downside of AI and some of the fearful things to be concerned about while you're watching it. I thought it was interesting to share. This from the Kobisi letter today. Total U.S. federal deficit is now at a record 39.4 trillion, which you saw earlier. This is the Fed chart from the Federal Reserve. You can see it very clearly at a top. It's been going parabolic. This is doing what AI was supposed to do. Nick Tiramiranos, Waller, inflation becomes like pornography. I can't define it, but I know it when I see it. Oh, come on. That cannot be a real quote. That's how central bankers should think about inflation. Waller sounds skeptical of pulling back the lens on the measures of inflation the Fed traditionally highlighted by down-weighting core PCE and up-weighting alternative measures. If we move to a world where we look at a broad basket of stuff, the risk is the Fed looks like clear or transparent. I agree. You shouldn't change the models. This is my perspective there. At least not yet, anyway. I think you get inflation under control. Then you change the models at a time where, okay, we know inflation's at its target, so you change the models, recalibrate, and then you have the conversations. To his point, I don't think you do that before. I saw this weekend. It's wild. American stock and housing bears in the last 6 years. This dude was in the national park, got hit by a buffalo. It launched him 8 feet into the air. It was crazy. Steve Eisman on why the 60-40 portfolio isn't as protected as it once was. We covered this on a previous show, saying that the new alternative would be 80-20 if you wanted to go into QQQ, and this would be into Bitcoin, for example, or some type of alternative investment with upside potential. But again, everybody's different there. It's really hard to tell how in this entire generation, how this entire engagement is going. Retired general. Oh, this ought to be interesting. McChrysty, huh? McChrysty, whatever his name is. Well, let's hear what he has to say anyway, because you know what? When a retired general speaks on war, I think he deserves a listen. Let's hear we go. McChrysty, huh? McChrysty, whatever his name is. I hear myself. That's not good. Well, let's hear what he has to say anyway. Why do I hear myself? Oh, I know what's going on. Let's mute that bad boy. There we go. Let's see. How about now? There we go. All right. See, no echo. Technical problems.
Bottom line, it's hard to tell. I spent the weekend watching missile launches and drone launches and then some sort of blurry film of targets getting hit, but I couldn't tell what the target was, what the munition being used was, or where it was. And so it's really hard to tell how this entire engagement's going. And I think that's natural in war. You know, as you mentioned, I've been in business since I left the service. And in many businesses, what you do is you celebrate wins. You have a bell or something every time you get a sale, and it's ding, 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 and people get surprised. And then you get to the end of the quarter and you find out, actually, the value of each sale was lower than you'd hoped, and you're losing market share. And so what I think we in the United States have got to do is stop looking at these films because they are seductive, but they're not informative. And we've got to step back and say, how are we doing strategically in the region and actually more broadly in the world? And in that case, you got to think of your brand, you got to think of your reach, all those things.
Interesting spin on that. I'm not sure that's quite what I expected, but all right. Let's see here. Sam Altman caught copying Apple in 4K. I love the internet. It never misses. The irony that somebody used AI to create that is also it's also amazing. That's for sure going to be the cover of this episode. I gotta remember to cut it. Wow, Mark Zuckerberg needs to take his glasses off. Jesus, what's going on, Zucks, dude? Oh, I saw this preview for Digger. This thing looks interesting. It is not at all what I expected. Check this out. This is Tom Cruise.
Everything changes. You know, one day you're a cat. Just take a little taste for daddy. Come on, sweetheart. Or a king. Next day you're just ashes in a box. How long would you say she has?
Between 2 weeks, 5 minutes.
Mr. Rockwell, my name is Sandy Clarkson.
Yeah, Sandy. How you been, buddy? You're the man with the 5-foot crab. Now, glacier over there in Greenland, it shifts 5 feet. Now, this desk in front of me is bigger than 5 feet.
Mr. Rockwell.
My dick is a tenth of that size. What do you want me to shut down a billion-dollar platform over something that's 10 times the size of my dick?
Oh, I don't believe you understand what's happening.
First of all, I don't know who the cinematographer was in this, but this film already looks beautiful.
Sir.
What did you just say?
Sorry, sir.
Well, I know perfectly well what's going on there, because I'm paying for the whole thing. I'm paying for your fucking 90% Hungarian goose down winter jacket. I'm paying your salary. You want to shut her down?
Well,
say it!
Mr. President, we're utterly unprotected against a disaster of this magnitude.
What's our worst case scenario?
$18 trillion, sir.
Is that all the bad fucking news?
Oh, there's the nuclear waste, too.
Digger here got us into this mess, and Digger's gonna dig us out again.
Well, let's fucking go.
You knew, long before the rest of us.
That is why it is your problem! If we can't control the course of nature, at least we can control the narrative.
But it happened.
Mother Nature, she loved to winter!
You're gonna save the world.
All right, fellas, Mother Nature wants to fight.
Is he okay?
Mr. President.
Mr. President?
Fuck this iceberg, let's dance!
Help me shape the story.
They already know the story.
They know the facts. The story has yet to be told. When all else fails, you hit them with the truth. You know, the hard truth. Just bang, bang, bang. Woo! Woo! Burning down the house. Oh. Yeah, that feels good, doesn't it? That's my girl.
You know what? I want to see that. For nothing else than, first of all, it looks like an interesting story, but the cinematography looks really pretty. Yes, I'm a film nerd. I like to see pretty movies. I recognize all the jokes that can be made there. All right, let's wrap this show up with the AI piece here. I think this is a worthwhile share. This is not mine. It's probably gonna get this video flagged for copyright, but whatever. I think it's a worthwhile trade-off to show you some of what Fast Company was talking about here. I'm going to play it, and well, you guys can make your own conclusions here. It's 6 minutes. I don't know if it'll be the full 6 minutes, but let's take a listen.
And there's all these benefits that occur right now. They're almost like the sideshow, while the bigger asteroid of artificial general intelligence is hurtling towards Earth, which can totally transform the way that our economy works and is basically in the interests of 10 soon-to-be trillionaires, while likely disempowering the rest of us.
This is gonna be a fun conversation, guys. Strap in. AI is a frustratingly vague term for a hyperobject that is touching every part of our lives and every part of our futures. It's a philosophical invitation, but it's a philosophical invitation with a deadline. Because if we don't get the answers right, there will be consequences.
I think a lot of companies know that they can now replace a lot of their workers, financial analysts, marketing, data input. And the thing that's different about AI from other technologies is that AI accelerates AI, right? Like if I make an advance in like nukes don't invent better nuclear weapons, but AI is intelligence. So I can point that intelligence at the code that makes AI and say, make that code run faster.
Except we've now associated a price tag with that accelerated intelligence, and as a result of that, it's now discouraging people. And the fundamental problem here is probably obvious to many, but still worth noting, is that these companies are still not profitable yet. So they have to drive revenue, and they're doing that by saying, hey, you want the more complex model, which does all this really cool stuff, you get to pay more for it. So much so that is now outweighing the cost of a replacement employee for a lot of those functions. So either companies subside on the lower, less quality reasoning models, or they pay up for the new models, and then they're paying for tantamount to what's an employee. So there is a a problem there.
I think that just presents a kind of a double exponential curve that our brain has a hard time metabolizing. But as job loss starts to hit, I think that will be a major and significant way that people experience it.
For the nerds, that's called recursive self-improvement, and it's just the fear is that it becomes a runaway train. Even if you
Well, yes, and I agree with that fear, and I think that's a reasonable fear to have given the way the technology, as he noted, works. But I would also anecdotally add a couple other comments here that I think are worthwhile. Number one, up until now, everybody's been largely denying it. Here you have two people who are apparently better subject matter experts than me who have that same fear and relate to you as a possibility, number one. Number two, they're talking about how job loss will mount. He was very definitive. He's not saying if, he's saying when it does, which is a curious choice of words given his perspective and subject matter expertise.
don't lose your jobs, it will be devaluing your job. Because if your job becomes easier, then they can pay anyone to do it. Taxi drivers had to train so long to become taxi drivers, and they're protected by a labor union. Uber comes in and they disrupted that industry in a way that now they can pay the drivers less because it's all automated. You don't actually have any skills. Meanwhile, they are charging customers more. And that's kind of sort of the institutification of technology that we have already experienced through social media and all these other platforms. I believe that's probably what's coming next, honestly. Agentic AI and all these things, sure, that stuff might be happening, but I think the institutification is coming because they need to start making money.
They need to start making money.
How does OpenAI return the trillions of dollars that have been invested into it? They have more debt stacked on them.
Listen very carefully to this debt conversation. This is how I found the video, and he is exceedingly well versed on this, and I do see it as a problem. As somebody who's financed companies for the greater portion of 2 decades and worked with debt stacks and the repayment of debt over time, I can tell you that owning things is not modern day, slavery to those things. Owning things on debt is being a slave to those things because that debt continues to accumulate at an increasing cadence of compounding interest. And that same theory applies to the stuff that you own that becomes, it's the whole Fight Club theory. I was just having a conversation with somebody about that, but it's relevant. And now this same debt problem, unless they hit the same, parabolic rise of increasing revenue, which I don't know how you're going to get based on all the criticism we're seeing so far, is going to be a problem, and a problem he's going to cite very eloquently here.
Right now than Uber, Netflix, YouTube, like all those companies that took lots of debt before they turned a profit. The AI company, specifically OpenAI, has taken on way more debt. The only thing that will return that is not your ChatGPT subscription. It's not advertising. The only thing that returns that is building a replacement for all human labor in the economy. Their mission is not to augment every worker and give you tools. Their mission is to replace every form of human economic labor in the economy. That incentive is what should give you clarity about which direction this goes. What that means is every company that has an employee that they have to pay a lot of money and they might whistleblow and they sleep and they complain and they need childcare, or I could pay an AI. And so there's something in AI called the intelligence curse. This is based on in economics, the resource curse. If you have a country that discovers that its GDP can come from, say, oil, like think Venezuela, and then suddenly all of its GDP is coming from that resource and not from the labor of its people. So there you are as a government. Am I going to put money into better oil infrastructure or more human infrastructure? So what happened when the US gets more of its GDP from 5 AI companies and doesn't get any of its GDP from the people? Am I going to invest in like healthcare and childcare and education, or am I going to invest in data centers and solar panels and NVIDIA chips?
And there seems to be something that we're already seeing right there in and of itself, right? You've seen a degradation again of 401ks, of pensions, of caring for the employee. At one point in time, it was a sales pitch that Google used to make itself such a beloved company back in the day. And now all of those benefits are going by the wayside on the auspices of improving profitability because they're publicly traded companies, and it's a race. It's a race to the biggest companies in the world. And to his point, you're already seeing those losses. And you also have people like Elon Musk and Starlink that are rolling out these practical, necessary items to increase the quality of life. And thus, this GDP argument versus where you're going to put your money is real. It's happening. It's already here. That's not a future conversation. That's a conversation for right now. You hire an employee, you got to deal with HR, you got to deal with all sorts of other tertiary implications, benefits, healthcare. You hire an AI, you're dealing with hardware. And right now, hardware is less of a risk and it's arguably cheaper.
can see that this is leading to a worldview where we don't actually value humans. And unlike the Industrial Revolution, where a labor union could band together and say, we don't like these working conditions, we're gonna like withdraw and bargain, in this new economy, what power do you have? Because countries don't need you for your tax revenue, and corporations don't need you for your labor because it's coming from AI. So this is literally the last moment that your political voice will matter. And this is not trying to be doomer, this is trying to be clear-eyed. Let's change course. Let's have a system, not the intelligence curse. Let's create the intelligence dividend like Norway did with its sovereign wealth fund, where you distribute the gains to everybody, like Alaska does with its sovereign wealth fund.
This is also part of the reason you've heard me on previous shows talk about how I don't have a problem with the United States creating a sovereign wealth fund, taking percentages of OpenAI and whatnot. Now, I do have a problem with that being done for a defensive position so that those companies can ultimately receive some type of government support or bailout. I do think that a sovereign fund in the United States, it makes a whole lot of sense to help take care of the people better, which is also what he's advocating.
Distribute the oil revenues to everyone in the state. We can do things like that if we're really clear-eyed, and let's not wait for the catastrophe, let's do it right now.
We should be demanding a plan of some sort. If we're going to be dealing with these companies and giving them our money and giving them our business, we should be able to say, hey, actually, I'm going to wait. I'm going to hold off. I'm going to pull back my engagement with this technology until an actual plan is set in place for how we are going to deal with.
That train's left the station. Okay, the LLMs, the frontier models, the Chinese models, they're all out there. They're all actively being worked, and people are using them to be more productive and make their lives easier. You're not going to put that back in the cage. So, as much as I appreciate what he's aspiring to with that statement, I would say that's a very illogical understanding of the current state of the environment.
Job loss, job transition. Basically, after the Industrial Revolution, we had to build a completely new relationship with work. We're gonna have to do that again, but we don't have to wait until everything gets bad before we do that. We have the force.
Humans may have foresight, but they always wait till something bad happens to remediate it. Look at inflation.
Right now, I just encourage anyone who's worried about their jobs to push back and have conversations and really
push back on who? The employer who would happily fire you to replace you with AI? Again, maybe he has some technical skill, and both these guys are brilliant, by the way. I'm not discounting them at all, but I'm just challenging that statement. I don't think without popular mainstream adoption of a movement, which you're seeing in some colleges, I guess, to his credit, you're not going to get that pushback because companies just won't deal with you.
Organize and try to figure out how we can use our leverage right now while we still have it. Most of my life, I was worried that I was useless. I was not good at most things. I was not good at school. I was not good at sports. I felt like I do not have anything to contribute to the GDP of my country or to even to my family. I had such an anxiety about this because.
Bro, you're more talented than you give yourself credit for. I hope he sees this.
Of the story the system told me as a kid. The story told me I'm only useful if I can help them with something productive or whatever. But there's so many things within me and within everyone in this room and everyone watching this video that the system would call useless. And the system would say is a disorganized and uncontrollable and inefficient and hard to define. To be definable is to be controllable, and to be controllable is allowing them to go down this path. So I encourage people to search deeply for the flawed, broken, useless things and really express those things and really.
Yeah, I encourage it too, but again, very optimistic, rosy perspective of where we are. I think we're way past some of that, but their points are valid. And there seem like two very sharp and intelligent, caring people, which this world needs more of, frankly. So no disrespect intended to either one of them. My marketing company created it. They are fixing it. Great. Okay, well, all right, guys. It's been a longer show. I started a little early. Sorry to mess with your schedule a little bit, but I wanted to make sure that some of the technical side of things was operating. I'm glad we got through the show with most things still intact and not a whole lot of problems, not a whole lot of breaks. I'm going to continue to try to improve things, continuing to build in the market segments at the top. And I'm going to continue to try to build in some elements here that I think really make this show better. I know that the cadence is one of the things that can be up or down, and the engagement on the show. Some shows are great, some shows aren't so great. I'm trying to find a way to build a system where you have a continual expectation of what you're going to get, our value proposition, if you will, for the show. And part of that has been improving the aesthetics. A lot of it's going to be about bringing you data in a truncated, consolidated fashion that we think is really powerful. As a reminder, the show is lovingly brought to you by the team over at Fridays. Go to joinfridays.com, enter code HIGHER, get $100 off your first order. They support us, and it means the world to us. We could not do a lot of things that we do if it were not for their support and your support. Thank you for tuning in, everybody. We'll see you on the next show.